Hello, good morning, everyone. Welcome to our, let me give this camera a little clean. Oh, you know what it is? It's condensation. That's not good. Good morning to our morning update. It's Tuesday, June the 20th. You're going to see a little bit of light behind me. It's a little bit of a godlike feel to it. I promise you it's not intentional. It's just how it kind of worked. Maybe I'll change my position for tomorrow. But welcome to our update. I got exciting stuff for you. A little sore this morning. My body went surfing, took a bit of a beating, did a somersault forwards, did a somersault backwards, got a few cuts. But hey, you know how you train the body? Just do it again. That's my solution. I'm going back out today. Man, the waters out in Nicaragua are super powerful. You see a small wave, and you say, hey, you know what? I can get this one. And then it comes in crashing and burning down the shore with some pretty crazy speed. So it was fun. It was interesting. It was exciting. By the way, I got a video for you guys. If you're new to this, to the channel and listening to this, subscribe down below. Join the channel. We do morning updates daily. And I'm going to post some cool stuff coming up next few weeks. I got a video I'm working on what I pack and how I pack to travel or trade while I'm traveling. Technology, what I use, how I pack it, and how to keep it light and nimble. I literally got my office down to a bag probably this big. All right, and that allows me to go and trade anywhere in the world, which is exciting. So I'm going to take more advantage of that, be traveling more in the future, and post videos for you guys on YouTube with my experiences. I'm going to have a cameraman behind me at all times. And we're going to use probably 1% of the footage because all the stuff I do, not appropriate. All right, with that long-winded intro, I'm just kidding, by the way. Let's talk about markets today. In Asia, Japan's up 0.8%. Hong Kong's down 0.3%. China down 0.1%. India's flat. In Europe, London's up 0.1%. Paris is up 0.3%. Frankfurt up 0.3%. So you can kind of see a theme here. In Asia started out strong from the Japan session, and then that kind of curtailed or dropped off. And it wasn't weak, but it started to get neutral. We're hanging around all-time highs here in equity markets. There's some downside pressure from oil we're going to talk about. Bonds are going up. We're going to talk about something that's taking place, a shift that's happening here from the smart money, where they're going to and what that means for you for trading. And we're going to talk about gold as well. Futures in the S&P 500 in the morning here, Dow's up 0.1%, S&P's up 0.1%, so relatively flat. When I say up 0.1%, it doesn't really make much of a difference. NASDAQ 0.2%, crude currently down 1.7%, down as much as 2.2% overnight, and gold's up a little bit at about 1247.30. It's holding some of that support. 1250 looked like a decent level, but below 1242 to 1245 is a good support if you want to try the long gold trade. Just be careful because there's a big unwind in gold. We saw some institutional money start to pile in last week. And on our Commitment to Traders report, and we're doing a whole webinar on that, by the way, on July 5th. So if you'd like to sign up, click the link in the description. You're going to be able to sign up, and I'll tell you how to use this report, where to find it, what it means for your trading, and how to structure ideas around it, how to trade with the smart money, not against it. Okay, that's coming up July 5th at 7 p.m. So sign up, click the link description below. Economic calendar for today is pretty quiet. 8:30, we got a current account. 8:55, we got Red Book chain store sales. And 3 p.m., we have Fed's Kaplan talking monetary policy. I'm going to give you guys an update, some more monetary stuff on the wire today. We're going to talk about that, some Fed speakers, why the pound dropped over 1 cent or 100 points, 100 pips really, and oil. That's going to be the gist of today's morning update. Let's start with the dollar, all right? Dollar kind of rose a little bit higher overnight from some Federal Reserve commentary. A few speakers talked on the strength of the U.S. economy, and I'm going to recap their statements. Why is it so blurry? I'm going to fix that for tomorrow. Sorry, guys. New York Fed President William Dudley saying that he's confident the expansion had a long way to go. All right. While Chicago's Fed President Charles Evans said the fundamentals look good. There's a little bit of divergence here among the Fed officials as to where they think the economy is headed. And if you think about it, there's a little bit of dovish statements, a little bit of hawkish statements, but the Fed continued their rate hike. If you look at bonds and the fact that they're climbing higher, when bonds go up, that means yields or interest rates go lower. Okay, it's an inverse relationship. It always has been. I can explain it. That's another topic from the webinar. So when bonds are climbing higher, interest rates are going lower. So what the bond market's pricing in is the Fed's probably done hiking rates until December. The next meeting's in September, but the market's discounting that and saying, look, you did 3 rate hikes. The next one will probably be in December if there is another one this year. Okay, now the focus turns to the balance sheet and has been turning to the balance sheet. All right, Fed's Evans, who's mostly hawkish, did a surprisingly dovish tone, meaning that he thinks more accommodation and lesser interest rates is the right thing to do. He said the current environment supports very gradual rate hikes. They went from hiking and saying we're hawkish, let's go, let's hike, let's do this, it's time, to now even Evans himself being a hawk saying, hey, let's go a little bit more of a gradual pace. That's important to know. So the focus is starting to come off these interest rates. We think the interest rate hike cycles are probably going to curtail for the next little bit. And we won't see one until December. If we see one at all this year, we may not. Okay, the hiking might be done. So the US dollar rose on that news. Sterling, the pound, British pound, GBP /USD or GBP USD is a currency pair that most traders use. If you go to tradingview.com, you could actually pull that up. All right, GBP USD, type it in all one word, and you can see it took a beating. Why? Bank of England's Governor Mark Carney, who used to be the Bank of Canada speaker, said now is not the time to raise interest rates. Basically, say, you know what? It's not time to hike rates. The dollar appreciates. Any currency in a country appreciates with higher interest rates. Why? Because capital flies into the country looking for some opportunity to invest, to earn an interest on it. Lower interest rates means less interest from the institutional money to pile into the current country's currency. So once he said that, it dropped 100 points, 100 pips, which is 1 cent, which is a big move in currency for overnight. All right, some investors in England had hoped that the central bank wouldn't have shifted in that direction. They hoped that they would maintain their current outlook, but no, they didn't. Carney just went out there and said, hey, you know what? Interest rates may not be the best time to be increased at the moment. That caused a sell-off. Watch the pound. Okay, dollar strong, pound is weak, which means you would short the British pound against the US dollar. That's the currency trade that would give you the most strength, the most opportunity and likelihood of paying off. When you're trading currency, and we do it once in a while, not often, but we trade it on a fundamental perspective, on a larger picture. What you want to do is short the weak one, buy the strong one. That's how you put together a good trade opportunity for yourself. Let's talk about oil. This is the highlight of the day. Oil dropped 2.2% overnight. All right, the 7-month lows and the low of the year was in oil, traded into the 43 handle. So it broke below 44 on light volume, mind you. So keep an eye out on that. But oil's dropping because of Libya. We talked about Libya in one of our market analysis live updates. Libya is the potential here to disrupt this OPEC production cut agreement. I remember Libya was not included in the production cut. So what did they do? They came up with a deal with a German company, and they're putting some more oil fields at play, and they're ramping up production. So being as that they're in the OPEC, but they're the ones actually increasing output, Saudi Arabia can't be happy, and neither can all the other OPEC countries that agreed to a production cut. So Libya's got the opportunity to derail this agreement. That's why a lot more supply in the market means prices head lower. On this news, and on the news that Libya's pumping more, markets sold off pretty hardcore. So Libyan output climbed to the highest in 4 years as they put their oil fields back online with this Germany company deal. All right, volume of oil held in floating storage. You guys got to know, shipping right now has become so cheap. Back in the day, there's an index that tracks the cost of shipping goods across the sea. When it got cheap, what oil companies started to do is buy oil, the barrels, and stockpiling them in these ships, these massive tankers, and they're just floating it out on sea because it's so cheap to store. Right, you hold that oil. That storage is increasing, so we have so much supply, and there's supply on the ships on the floating out there in the sea. All the supplies are pretty much chock full of oil across the world. The supply narrative is killing oil right now, just putting some real serious downside pressure. Don't look to buy oil, look for an opportunity to short. I think we're taking it down to the 40s range. And the 40 handle, if we break 40, we're going 39, 38, obviously, and we could tumble on the way down. Keep an eye out on Libya. That's something that most news outlets aren't talking about, but I need you guys to know that. All right. In addition to that, U.S. drilling and U.S. oil production has increased for 28 consecutive weeks now. The Baker Hughes Index comes out at 1 p.m. Eastern on Friday. It's shown 28 consecutive weeks of oil production output. So the U.S. is increasing their output. Libya is increasing their output. And you think OPEC's production cut's going to get honored? I don't know. Look out for that in the future. This is a high supply story with low demand on oil. Okay, the EIA, which is the Energy Association worldwide, said global demand is going to stay flat and even decrease in 2018. So we need supply to be cut, but Libya is kind of the thorn in the side here. Keep an eye out, keep reading the news, and our trade pro trade is the short oil on any rallies. You find some rallies of resistance, get in there, take a low risk short, tight stop overhead and ride the trade downwards. Go with the trend. The trend right now is down. Don't look for a cheap asset and say, I'm going to buy it just because it's cheap. That's the worst reason to buy anything. All right. Ask yourself, why is it cheap? Maybe there's a reason it's cheap. Okay, it's not Christmas sell. I can't even talk today. It's not Boxing Day sales here. You're not looking to get the best price. You're looking to get the best opportunity. And sometimes the best opportunity doesn't come with the best price. All right, remember, as a trader, your job is to make money. You can make money on the upside, but you could certainly make money on the downside. Right now, the trade's on the way down. Oil continues to tumble, short rallies, and enjoy the trend. You guys take care. That's all I had for you today. On tomorrow's update, we'll give you a little bit more news of what this webinar we're doing is on July 5th, but I strongly suggest you register. You're going to learn a lot. You're going to learn how to read where the smart money is going into oil, where it's going into currencies, where it's going into metals, equity indices, and how to tell if institutions are buying or selling an asset. Think about this. If they're selling an asset, what do they get? They get cash. The next question is, where are they putting that cash? They're not just going to keep it as cash because they need to invest. So where's that money going to go? And I can show you a report that comes out weekly that's free that tells you all that information. Subscribe in the link below. We'll have that webinar ready to go for July 5th at 7 p.m. Eastern. Hope to see you guys there. Take care. Have a great trading day. Be careful. Manage that risk. That's your job. At the end of the day, in one sentence, somebody said, what's trading about? It ain't about making money. It's about managing risk. It is the profit. You guys have a great day. Trade pros, hang tight. Let me shut down the broadcast and open up the room. Got a whole day trading, and I'm excited. Hope you are too. Have a good day.